Let me ask how important you think the focus on SMEs is. How important are these small, medium size enterprises, and how hard are they getting hit by this pandemic?
It is very important because they do create a huge amount of employment in the country. And for many of them, of course, there's been a complete stop on their business. I mean, the most obvious ones being restaurants and hotels, but a lot more, too, who are in the supply chain for the leisure and tourism industry, or indeed for manufacturing industry, which is largely closed down. So it is absolutely crucial. I think the really key thing is that we need to ensure that there is productive capacity in the economy for when the opening up and the upturn eventually comes. Because if we've lost productive capacity because firms have just given up during the crisis, then we will have a constrained upturn. So it's both important on the downside, but it's also very important to position the economy better for the upturn.
How difficult is it going to be for these businesses? I mean, you mentioned, for example, restaurants or, merchants, service businesses that are collecting zero revenue right now, but getting loaded up with debt, some of it with very high interest rates, relatively high interest rates. How hard is it going to be for them on the other side when they come out of this pandemic loaded up with debt?
Well, I'm not sure about that in all cases at all, because, first of all, the furlough scheme from the government means that they can recover most of their employment costs if they're eligible for that, and many, many are. Also, the Corona Business Interruption Loan Scheme, or CBILS as we now know it, does not have an interest rate in it for the first year. So most people whose businesses has clearly been interrupted by CBILS and who are eligible for this scheme will be taking on additional debt, but it will not be at an interest cost. Now, or at least for the first year. Now, of course, the question is whether in the long run those will be viable with a larger amount of debt on their balance sheet. And I suppose the honest answer to that is some will be and some won't be, which is why I think the government and others are now looking at whether in some cases there is a need for an equity instrument at the end of all of this, whereby some entity, some government-backed entity perhaps, takes an equity stake in businesses where they can't survive with that huge amount of debt. Now, that's a problem in a way that we hope we will have, because that's more of a problem of the reopening than it is of the close down. But at the moment, the loans available are at zero interest for the first year under the government scheme.
Do you expect some kind of debt forgiveness? There's been a lot of talk about a jubilee. As a banker, I'm not sure if that rubs you the wrong way, but is that a possibility on the other side of this, Howard?
Well, I guess it is a possibility. It's not something which would be at all easy for the banks themselves to do, because, of course, our money is all somebody else's money. So if I'm forgiving a debt to a borrower, I'm also, spending your deposit, which is not something I guess you'd appreciate. So if that is going to happen, there's going to have to be some public sector involvement in it somewhere, because I don't think the banks would be sensibly advised to do that. Apart from anything else, if a bank creates a big hole in its balance sheet, then credit is going to be constrained when we eventually do reopen the economy, and that is absolutely what we don't need. Because in the last financial crisis, of course, the problem was why the recovery was so weak for so long, is that banks who had big holes in their balance sheets couldn't extend credit on the scale they had before. Now, this is not the same crisis at all. This is a real economy, a health crisis, not a financial crisis. But what we must avoid doing is turning it into a financial crisis and getting into a situation where the economy cannot turn up because of a credit crunch. So that's the calculation I think the government have got to think very hard about.
To what extent, I mean, you mentioned the fact that banks' balance sheets are much stronger now than they were in the last crisis, so they're able to do the lending that's necessary to avoid a credit crunch. Are you doing that? Are you able to get all the companies that need money lines of credit?
Well, in principle, yes. I mean, I would acknowledge that the original start, the start of the scheme, did get off in a slightly hesitant way, and I think that was partly because of the way it was designed, which the government then changed last week, because Originally, you had to prove that a business was, one, not damaged by the crisis, two, not eligible for financing on commercial terms. And that was, of course, a hoop that you had to go through, which now you don't any longer have to go through. So the money is flowing out much more quickly over this last weekend than it did in the first 10 days of the scheme. So, and it's not a problem of capacity in the big banks anyway. We certainly have money available. We have a very strong capital ratio. Our balance sheet is healthy. We can lend. The only holdups have been on the nature of the scheme. We have to go through a credit appraisal because the government is only guaranteeing 100%. In Switzerland, where the scheme went much more quickly, the government was guaranteeing 100% of the loan. So there was no credit appraisal process that was carried out by the banks on the way through. That inevitably produces a slight delay. But there's no issue about credit availability overall. And so the scheme is now working quickly. We've approved 2,500 loans. We've got another 700 which we've effectively approved, but which are just waiting for sign-off by the client themselves, not by us. So the scheme is now working pretty rapidly, and it isn't constrained by the financial position of the banks.
Howard, let me finally ask you about the changes. I mean, I'm sure a huge amount of your staff is working from home. I wonder how that experiment's going and how this pandemic is going to change things permanently. Do you expect permanent changes?
Well, it is going quite well, actually. I mean, there have been some difficulties for us because we have quite a lot of our support staff in India, and India had a close down of a rather dramatic kind, as you will know. And in India, working at home is more difficult because the Wi-Fi and where people live is not necessarily so great. These are practical problems, but they're important for us. But overall, the process of getting people to work at home has actually worked pretty well. I guess one has to ask oneself, though, you know, that is based on a lot of social capital built up in institutions, not just ours, where people know each other, they trust each other, they've worked with each other for a while, they can operate remotely for quite some time. I think you have to ask yourself, is that something that could continue in the long run? You know, you'd bring in new people, they would never have met the people. I just don't think it's a tenable model in the long run. That said, I think we are going to learn some lessons, and probably we will have more remote working than we had in the past. But a wholesale, you know, let's never all go back to the office, I don't think is realistic.